Hello and welcome to this quarterly Vinva Funds Update. My name is Mark Jordan from Magellan Investment Partners, and joining me today is Vinva Lead Portfolio Manager Trent Larcombe. Welcome, Trent.
Thanks, Mark.
Perhaps we could start by talking about the last quarter's performance for both the Australian and global portfolios, and any key insights that you got from the last quarter.
Sure, Mark. Thanks. Well, it was a very interesting quarter. We probably have enough information to last us a full year, I think, out of that quarter. But certainly the themes that came out of it was probably the geopolitical tension going on at the moment, the inflationary environment that's back, and then just sort of policy uncertainty. I think it's sort of overshadowing the global markets in the moment. So certainly saw a volatile period for that first quarter to start the new year. The US, from its highs, came off about 8%. The local market sort of held up pretty well, sort of ended up flattish for the quarter. I think we're not as probably tech heavy as the US is, and we certainly saw a derating of tech over in the US during that first quarter of the year. With regards to our funds, the Australian funds, after a strong 2025, slightly underperformed the benchmark for the quarter. I think some of our sort of overweight in our copper stocks got sold off. That hurt us a little bit. Some of those drone shields in the OS, some of those defensive stocks did quite well, which we weren't sort of positioned for that. But overall, not too bad as a quarter. As I said, slightly underperforming the benchmark with regards to the Australian funds. From a signal perspective, valuation and our behavioural signals slightly underperformed, where the rest of the signal buckets did okay. With regards to the global funds, slightly different quarter compared to the Australian funds. It carried on its good form from last year and outperformed the benchmark over that first quarter. Across all of our signal buckets, we saw some strong performance, particularly in our valuation signals and our sentiment signals. So that was overall a good quarter for the global funds to continue on from a strong 2025.
Yeah, great. As you say, it was a period of heightened volatility. How do Vinva strategies typically perform in periods of stress? And are there any lessons from past cycles that shape the investment decisions that you're making today?
Sure. The models that we build through our investment insights and portfolio construction process from the investment team certainly is built for no particular environment with regards to volatility. We built those models to handle low volatility, high volatility environments. But if anything, maybe in some high volatility environments, which we've seen over the last 3 months, there's a bit more of sort of cross-sectional stock dispersion with regards to pricing. That can lead to some opportunities we find. Our suite of signals as such are adaptive and do move to some price shocks and fundamental changes through some of our short horizon signals and our global linkage signals that are looking for sort of data sets sort of around the world to impact some of our signals and increase our forecasting ability. So if anything, maybe it does create some sort of mispricing that we're looking for in the marketplace through that volatility, and maybe sort of seek out some opportunities. With regards to previous cycles, yeah, I think it always gives us the opportunity to test our signals, to make sure our insights are robust through various environments. So those various environments and stress periods are important and good for us to be able to test our portfolio construction process and our insights. If anything, through those periods, there might be some small refinements of existing signals maybe, but no large structural changes out of our investment process that come out of that normally.
Thanks. Now, Vinva's approach focuses on many small, diversified positions rather than concentrated bets. How does that help deliver more consistent alpha through the different market cycles?
Sure. I mean, we're not immune to these environments and these shocks as such, no one is. But I think the way we construct the portfolio is one of diversification and breadth across the universes that we sort of invest in. So that enables us, through our risk controls, to not take large single stock concentrated bets. It's certainly through the risk model takes out any unintended sort of thematic or style bets that we might be putting ourselves under through our single stock sort of ranking process. So we do use that risk model to sort of to squash or neutralise a lot of those unintended bets, which helps us navigate through some of those mini shocks or future events that we're unaware of. So essentially, the portfolio looks like, a lot of active single stock active positions across a wide range of stocks. And then through that risk model, it really tends to neutralize any of those sort of unintended big country or sector bets that we might be looking to get through if we just let our skill take its way. We try and sort of negate that through our risk model, which then we think through that sort of adaptive signals, looking to capture opportunities and adapt through the environment, that enables us, we think, to get some sort of consistency from an outperformance and alpha perspective and not get really hurt through those shocks or events that are upcoming as such.
So in talking about signals, Vinva were very early adopters of machine learning and language processing. How are you using AI today to extract those signals from data? And what advantage does that give Vinva's investment process?
Yeah, I think, as you said, we were early adapters. We're in the systematic investment process. That's what we're built on and found upon. Large language processing, machine learning is something we've been in for years and years. So I think we're leaning into the new world of AI over the last few years. It's definitely been commercialized as such. So some of the areas that we're seeing some real development and usefulness is in our sort of productivity around our research team, and looking at existing signals, looking at the new orthogonal signal out there. That's assisting in some data collection, some sourcing some unique data sets in utilising that sort of AI component of that. Certainly the productivity of speed in producing potentially new research signals and looking at existing ones is helping. I think I touched on the data sets in sourcing some unique data sets and collating unique data sets by utilising AI. That can improve the quality of some of our signals. So I think, all encompassing, it's possibly, productivity-wise, I think it's definitely working for us. We know that area well, so we're able to use that world of AI productively. I think it's helping, as I said, on that sort of quality side of things with our signals from the data sets, etc. So yeah, it's been an interesting past few years with regards to that development, but certainly something where it's part of our process, particularly on the productivity side of things.
Fantastic. Earlier, you spoke about some of the attribution coming from factors in the portfolio in the last quarter. Are you seeing any shifts in factor performance? So, for example, value, momentum, quality, and do you adapt your investment approach because of these factor shifts?
Yeah, I think ever since I've been in the industry and in sort of systematic investing, I think we've seen various rotations and times where factors are underperforming, outperforming. So I don't think it's any different today as what it was years ago. We're still seeing times when certain factors, as you said, valuation, quality, sentiment, have their time in the sun, have periods through environments where not so. So that hasn't changed too much, I think. The way we construct our portfolio is diversification, not just from a single stock and breadth exposure, but certainly across our signal buckets. So we look to have a nice balanced approach with regards to our exposure to our signal buckets. So what you'd see in our portfolio is a fairly balanced exposure within the quality, the valuation, the sentiment, behavioural, and our global linkages and short horizon signals. So therefore, we're not dependent on one particular factor as such, if a factor is doing poorly or well. So the way we construct the portfolios is to not be exposed when one is doing really poorly by having too much exposure in a particular signal bucket. So that's the way we sort of get around that. Very similar to, as I said, to the way we build out the portfolio from a single stock perspective, is that we like to have a nice balanced approach with regards to our signal bucket and factor exposures.
Just to finish off with, looking forward, how are you thinking about portfolio positioning in the current environment? And further to that, how does your investment framework help manage risk and capture opportunities through both anticipated events and also unforeseen market shocks, if you like?
Well, certainly an interesting time right at the moment. And Yeah, the crystal ball would say it's going to continue on with regards to some of the volatility we've seen in the marketplace, certainly sort of from a macro environment perspective. And we just came out of an interesting reporting season in Australia. So I think all angles from a micro and macro perspective, you can see that the foreseeable future is one that's a little bit uncertain out there. I think where we talk about the consistency from sort of alpha and our performance and our deliverables around that and the way we're constructing portfolios to navigate through these environments. So, and that is really about not being exposed to certain environments, to making sure we're negating ourselves for any, as I said, any unintended bets where there might be a future shock or event that we're unaware of. So that has really helped us navigate through these environments, but that sits within that risk model and that construction process where we're looking to really sort of negate any unintended bets that we take out of our skill component of our model. So I think that will help us going forward with regards to trying to forecast future events and deal with those shocks. We also do look at sort of some of the thematic bets out there, some events that we know are happening, like sort of the liberation and the tariffs, like the US election, etc. Some events that we know are coming. We can certainly look through the portfolio cross-sectionally and see our active share exposure, just to see how we are exposed to those sort of events. But more times than not, we haven't got very big, large active bets from those upcoming events as such when we look at our active share with regards to those sort of events that are known as such. So really done through our risk model and through our diversification of our single stock active bets.
Thanks, Trent.
No worries, Mark.
And thank you for watching. If you'd like further information on the Vinva funds, please visit the Magellan Investment Partners website. Thank you.